Hello everyone and welcome back to our Marine Money Cyprus 2020 virtual forum. Again, I would like to thank the Shipping Deputy Ministry, the Cyprus Shipping Chamber and the Cyprus Union of Ship Owners for supporting us today, as well as all of our sponsors whose logos you'll be seeing on the various screens during the session and during the whole day. And of course, a big thank you to our speakers who've taken time and effort to prepare. Just before we start, a couple of ground rules. All guests will be on mute to maintain quality control. During the session, you can send in questions in the box shown now on your screen. I will receive those questions and ask some of them on your behalf at the end. The session we're going to discuss now is Cypriot banks, Cypriot shipping banks and market profile. Our moderator is Mr. Jonathan Ward, partner, Stephenson, Harwood in London. Jonathan, please.
Good day, everybody, and welcome. Thank you for joining us today. I would get straight off and introduce you to our panel. I have 4 members of the panel with me today, and starting with Nick Pavlidis. Nick is the head of shipping at the Bank of Cyprus. He joined in April 2017 to set up the shipping centre in Limassol, and Nick has 24 years of experience in our sector. He's worked for RBS for a long period in Piraeus and in London, and prior to that he was with Scotiabank. And I've noted that Nick is a member of the Institute of Chartered Shipbrokers and holds a Masters in Shipping, Trade and Finance from the CAS Business School, and interestingly a Masters in Spacecraft Technology and Satellite Communications, which I'm sure he uses on a day-to-day basis. Antonios Spanakis is the head of shipping from Hellenic. Welcome, Antonios. Before joining Hellenic, Antonios was the Global Tanker Credit Coordinator and Senior Vice President at DVB in the Netherlands. And prior to that, Antonios had worked with Eurobank in Greece, and he holds a BSc in economics from the University of Athens and a MSc in international banking and finance from the Heriot-Watt University in Edinburgh. Next on the panel is Constantinos Milios, head of shipping finance at Eurobank Cyprus. Constantinos holds a degree in mathematics and philosophy from King's College in London and an MSc in shipping, trade and finance at the CAS Business School. And he's held various positions in the areas of the finance profession at KPMG, Societe Generale, Lucky Investments, and he joined Eurobank Cyprus in 2009, and he's been heading the local shipping finance unit since 2017. And finally on my panel I have Christos Xygkakis, manager from the shipping unit in the AstroBank. He joined AstroBank in 2018. He set up the bank's shipping unit, of which he is the manager. Before joining AstroBank, he was at ABN, and prior to that, he was DVB. And he started his professional career at Piraeus Bank as a credit analyst. So again, been in shipping for a long time. And a graduate of the CAS Business School. So that's a number of you. So my conclusion from that, having read your CVs, is that you're all highly educated and perfectly placed to comment on the status of shipping in Cyprus today. So our topic is, with more European banks pulling back from shipping, are the Cypriot-based banks finding good opportunity to expand their business in their Cypriot and Greek markets? So let us proceed. This is a very interesting panel topic. It's well known that certain European banks have left or will leave shipping entirely. So Commerzbank, NordLB, RBS, DVB, for example. Each of these banks had an important foothold in the Greek and Cypriot markets and the ship financing scene. So there must be opportunities for each of our panel members, and we are going to hear from them whether they have been able to capitalize on those opportunities. So let's start off with the current status before looking forward. Let's look at the current status. So looking back at the last 18 months since we last met at the Ship Finance Marine Money in Cyprus, all before COVID, I would like to ask each of the panel members, how have you performed in the last 18 months? What have you been doing? And how has COVID affected your lending? So can we start with, let's start with Antonios. Can you give us a few thoughts on that opening question?
Thank you very much, Jonathan. First of all, I would like to thank Kevin and the Marine Money team for their kind invitation and the microphone they're giving to us. And of course, you, Jonathan, for moderating the panel, which consists of some exceptional professionals and some very good friends. So now looking back 18 months ago, of course, COVID has been a real shock for most of the industries, with some that have suffered more and some other have suffered less, while only a few saw an improving performance. As a result, all banks had to run stress tests to see how resilient their credits are to this exogenous shock. Shipping, compared to other industries, has shown an acceptable performance so far, given the circumstances. Therefore, the shipping bank loans to ship owners performed mostly according to initial assessment and structure of each deal, and were less affected by COVID compared to others. Hellenic has built a robust risk governance framework across all industries that we lend, not only shipping, and that's why we have managed to maintain a very high quality balance sheet. So for ship finance, we have maintained our focus and our strategic plan to continue to expand our portfolio under a mindful credit policy, which focuses on deals that are structured to withstand this market volatility and overcome the COVID and or other problems that we may see from time to time. Year to date, 2020 has been the most successful year for the bank, and we're confident that 2021 will be even better. So overall, I would say that the pre and post-COVID ship finance lending in Cyprus has not changed significantly.
That's very interesting. Christos, you're up next. What's your thoughts?
Thank you, Jonathan, and thank you, Kevin, for arranging this. Well, at AstroBank, we entered the ship finance market, about 2 years ago, and we went with a clear, long-term strategy. 2019 was our first full year of operation, which has been very productive, and we exceeded our targets. And 2020, we have remained active, and we have closed a number of deals with new clients also. Over the last few months since the pandemic, we have increased the monitoring of our existing transactions, and of course we have remained supportive towards all our existing clients. Of course, compared with 18 months ago, I think banks today are more cautious and conservative compared to before COVID, and of course this also applies to us.
Let's see. Nick, could you comment, please?
Yes, thank you, and compliments to you and Marine Money as well. The shipping center of Bank of Cyprus was established less than 3 years ago, so it's been an interesting time with ups and downs in the market, but our strategy is to grow the book, and we're consistent in what we do. You can imagine that COVID, it was an interesting time during this developing phase. We've continued to expand this year, and perhaps less than we were planning, but mostly because of market particular issues. S&P activity is much less, inspections of ships and change of crew are a lot more difficult. So that had an impact on some transactions we were planning to do. But we continue, we grew the book, and the biggest test of all was the test of the relationships and the test of the bank itself. And I think I'm really happy that this performed really well. And just to add a little bit to what Antonios was saying, shipping is a little bit more accustomed to cyclical markets than other corporate sectors, and sectors that perform with tight budgets. a 10 or 20% deviation from the budget or the cash flow expectations would be detrimental. For shipping, 20-30% deviation of revenues or income is not unusual. So shipping was a little bit more prepared. Of course, all sectors had the bad days and good days during this pandemic period, and it's not over. Let's see what is going to happen. But I'm really happy that we at the shipping center have performed really well.
Just before we move on to Constantinos to say a word, I think it's been very interesting listening to all of the banks, to you and others, that at the beginning of the COVID lockdown, we all struggled with getting documents to the right places and dealing with sale and purchase closings. But it's been really interesting how people are prepared to be flexible. Even the shipping registries, they changed their requirements, and we were able to document things a lot more easily than we thought, and ship, sale, purchase closings could proceed even though remotely. So I think what you were picking up on, Nick, is very true, and it is a test of the relationships that the banks have, that they can work with their customers to find a solution. Konstantinos, what are your thoughts on these initial questions, looking back at the last 18 months? What's happened with you?
Thank you, Jonathan. First of all, I'd like to thank Kevin and Marine Money also on my part for this successfully organizing this event. I will start from your last point, Jonathan. Well, rather as a general and most important observation is that we have had no disruptions in the performance of our loans. We believe that our clients are very well equipped to withstand market downturns and crises like this one, which of course has not been easy for the industry. We are currently within our lending targets. Given our size, of course, we don't have an unlimited capacity to grow. There's a certain threshold in place in ship lending, but we have achieved all the targets previously set. And overall, I believe, and considering also the recent COVID crisis, I believe that the bank's choice to allocate part of its loan book to shipping has been so far well justified. We are relying on this high-quality portfolio, which is, of course, developed in close collaboration with our parent group, with Eurobank and in Greece. And we will continue entering new loan transactions under conservative terms with the same prudency as done to date, and hopefully without facing any problems. I would like to remark that the game is played on two fronts. One is the bank's prudence in entering transactions, and the other is the quality of the clients to manage such situations without issues.
That last point is very important, and perhaps nicely moves on to our next point of discussion. Is, you know, how from your perspective, how have the ship owners, borrowers been coping with the impact of COVID? Christos, could you comment on this? How have your customers been dealing? What sort of problems have they come across, and how has that been dealt with, and has Cyprus a special role here?
Well, you know, COVID has brought about, you know, many large difficulties for ship owner, and shipping being, you know, such an international industry. You know, first of all comes the, you know, from the perspective of a banker, the cash flow issue. You know, some sectors, you know, ships had to operate below OPEX. Of course, prudent owners had built cash reserves they tapped into, but some others asked for payment relaxation. We didn't have any defaults, but, you know, finance aside, clients faced, you know, very serious issues on the operational front, you know, as well. The most challenging of which was crewing. You know, there were months during which crew changes were close to impossible, and of course this has also affected S&P activity and in turn deal flow for the banks as well. on the technical side, there have been issues with local lockdowns, making the planning of dry dockings, ship surveys, or even the sourcing of spare parts difficult for owners. These are the main difficulties that our clients have faced.
And I was reading somewhere that the Cypriot government has been quite open to helping here. Is that right? And then,
yes, well, Cyprus was one of the first countries in Europe to announce borrower relief measures, and in March of 2020, the government of Cyprus issued a decree according to which owners were entitled to a moratorium on capital and interest payments until the end of the year. Of course, this was beneficial to the banks only in the sense that such a relaxation would have otherwise reclassified the loans, therefore increasing the risk-weighted assets and the cost for the bank.
I mean, that is interesting, because you may have read something similar existed in the United Kingdom, for example. I assume it also exists in other nations where through a government scheme you can apply for credit. And what's been interesting in the UK, I don't know what the example in Cyprus has been, is that ship owners have been quite reluctant. UK ship owners have been quite reluctant to engage in these sorts of schemes because it was supposed to be unsecured, but in fact it's ended up secured, and it's almost like commercial loan terms, so that it's not quite as attractive as it seemed at first. With a 80% government guarantee, I don't know whether the Cyprus government gives a guarantee of the debt.
No, what I'm talking about is a payment relief for existing loans.
Yes, for total relief. So that is interesting. And can I ask each of the banks, did many of your customers take up that possibility for payment holiday relief?
Only a very small number of clients approached us for relaxations, and as a matter of fact, they have opted only to defer some installments, not interest. So they have been paying interest as scheduled.
Right.
That's
interesting. Antonis, you has Hellenic had that experience? Have there been customers at the door, knocking on the door for payment holidays and relief, or how has it worked at your bank?
I think that we're very happy with our clients, because none of the clients that the ship finance unit has onboarded has asked the utilization of the decree as prepared by the government. So despite all this happening around the world, our clients continued paying. They supported their investments with own equity, and we had zero issues, zero defaults, zero covenant breaches, and no payment delay. So we're very happy with that. Going a step back about the overall problems that the ship owners faced during COVID, I would agree with Christos definitely that the first problem the ship owners globally faced with COVID was operational and mostly related to crew changes. So in my view, this is and still remains a very big problem for the industry during COVID, as it involves people and goes beyond monetary values. This is a serious humanitarian issue. However, our clients are experienced long-term established companies in all main sectors, and we're very glad that they find ways to overcome all these operational problems like crew changes, the dry docks, the surveys, the S&P closings with the lawyers as well, and they find solutions. The impact of COVID in terms of chartering and the earnings of the vessel has been contradicting. We saw that between the main sectors. Of course, tanker owners had a fantastic first half due to the oil price developments, with severe correction coming after, especially for the crude tankers, while for the dry sector, the situation was almost the other way around. For me, it's nothing more, nothing less than the known shipping market volatility. Having said that, we see one more time that shipping markets are related to a number of factors which may influence demand and demand for vessels and commodities, sometimes even differently. But the most encouraging sign so far for me during COVID period is the discipline that the sector is showing with a limited order book.
Very important point. Can I hear from the other two banks just on this question of customers approaching? It's quite interesting to have a straw poll here. So, Constantinos, have you had approaches for payment holidays? Just to share with the wider community, of course, we have seen the request for payment holidays from various ship owners, international ship owners, through our documentation as a law firm. But I'm interested in Cyprus to give the audience a flavour of what's actually happening in Cyprus.
Yes, well, Jonathan, the picture is more or less similar to the one described by my colleagues. We have had some requests. I should stress that the relief measures, the moratorium offered by the Cyprus government, as also Christos said, related to both interest and principal installments. Okay. We all know that in shipping, the non-payment of interest is considered as problematic because we are dealing with increasing exposures through the accrual of interest on aging assets. Our clients have all been reasonable, so we had few, compared to our overall portfolio, few requests for a moratorium, all focusing only on the deferral of installments, and with certain amendments in the documentation that the bank requested, which clients were very cooperative in concluding and signing. So I believe that the overall picture we obtained is that shipping obviously is more resilient. Clients are much better prepared to sustain such situation compared to other sectors, which rely on a stable growth with no such disruptions ever been forecasted, considering, for example, the hotel sector, which is particularly relevant for Cyprus. And I believe that if a group for any reason needs to revisit its loan repayment schedules, either because its assets are aging or because of the market conditions, they are always able to do this with each transaction discussed on its own merit without necessarily having to resort to government support measures.
That's interesting. Let's complete the picture. Nick, please have the floor for just to say your piece from Cyprus.
Okay, there were a couple of our clients. We spoke to a number of our clients about this measure. A couple of our clients requested repayment deferrals. That did not cover interest, as Constantinos was saying. And it was done amicably in so many ways. We discussed certain capex that was coming later in the year or perhaps next year, and the moratoriums came in the darkest of times in April, May, when the market was really below OPEX and no one knew what was going to happen with half of the Western world in lockdown. So it was understandable, and you know, someone might hear us banks in Cyprus saying that our portfolios are performing well and are covenant compliant, and they might think we want to show a very rosy picture. But the truth is that shipping in general has been more resilient, as Dino was saying, and for me personally, that was an unintended benefit, showing that our short-lived effort that we've done within the bank is a lot more solid in terms of credit and cash flow than many other sectors of corporate.
Yes, absolutely. I mean, I think it's a fair summary to say that shipping is crisis resistant in some sense. In other words, we have been through or do go through cyclic cycles, which is a very different picture from my colleagues who are involved in the rail industry here in the UK and my aircraft colleagues who've had it's a very difficult situation in those industries. So shipping has fared rather well, which is interesting. Shall we move on to?
Of course, Jonathan, we're in the middle of this, and let's let's not put a full stop. This is continuing. We don't know when it's going to end. Let's keep our fingers crossed that things will be okay at the end.
I agree with that. I agree with that. Thank you for sharing your thoughts looking backwards. Shall we now look forwards to new business? And one of the things we should address is certainly that COVID is perhaps presenting new opportunities and new markets. So what I'd like to hear from each of you on is, are there new opportunities, and in which markets do you think those exist? And also I would like to ask whether because of the departure of the certain traditional ship finance banks from the scene, that you now have more opportunity to, so to speak, dine at the top table. In other words, have access to senior folk at tier one shipping companies that perhaps would have been more difficult before that, when those banks were in play. So yes, let's hear from each of you on that. So Antonis, can you start on this area and share with us your thoughts? Thank you.
Sure. Yeah, I think there are many opportunities for a growing bank with a healthy portfolio and a robust capital structure like Hellenic. The theoretical challenge for us right now is to pick the best possible deal with the best possible counterparty. Given the, as you said, the continuous changing ship finance landscape, where traditional big lenders exit or reduce their clientele, or even change their strategy about which clients are appropriate for their portfolios, we're in a strong position to expand at a healthy mode from small to large also owners. The top table term is a bit subjective in my view. For some others, top table may be a listed company with 100 vessels, but for us, the size is not always a synonym to quality. We have the insight to see quality in smaller groups, and these groups may not be served by international banks. And this is where a relationship-driven approach is more advantageous for both parties. We know which banks are our competitors. We know the names that we want to do business. But the most important achievement for us within our 4 years of activity is that we have already established our own identity and philosophy in the shipping community by attracting clients with a similar perception about shipping markets, the risks and the benefits.
Thank you. Thank you. Christos.
Yeah, well, it's true that over the last few years, banks have been reducing shipping portfolios, or have withdrawn from the market altogether. Now, this was happening, at the same time, the Cypriot economy was recovering from the recent banking crisis, and of course, this created an opportunity for local banks in Cyprus to step up and feel part of that gap. I think yes, Cypriot banks today have access to names that were previously served by traditional lenders such as RBS. Of course, their clients at the top table are still today well served by some international lenders, but banks like AstroBank can do the smaller tickets or the somewhere older vessels, in those clients' fleet, which is what we have been doing also.
Interesting. Constantinos, would you like to share your thoughts with us?
Yes, well, as a local bank in Cyprus, of course, our size is a limitation, because obviously our loans and deposits and our books are well scaled down to the size of the Cypriot economy. Well, the exit of large lenders from the market, I believe in the last 8 or 9 years, the total the global ship lending exposure, at least among the 40 or 50 biggest banks, fell from around $450 billion US to around 300 in 2019, if I'm not wrong. This, on one hand, creates a financing gap in the global market. On the other hand, I think this situation has driven to a somewhat greater degree Greek and Cypriot ship owners to have a stronger foothold in banks in Greece and Cyprus. I will mention again the term relationship stressed by all of us, which is key in attracting such clients and retaining relationships. Our job and focus is not only to give new loans, but to service clients in the most integrated possible manner. So I believe that within this target market that we have, and capitalizing on our privilege, I would say, of belonging to Eurobank SA Group, we will continue lending to top Greek and Cypriot names. We have, through our parent, direct access to very strong, reliable players of global caliber, whose cooperation we have been enjoying over the past few years. And so I believe that the whole situation and downsizing of traditional ship lending globally is helping forge a stronger bond between Greek and Cypriot banks on one hand and Greek and Cypriot ship owners on the other. We do not have the capacity to grow to a substantial degree. I think the size of the local market is around slightly over $1 billion US, 1.5. Our parent group in Greece alone has more than twice this size, which gives us, of course, on one hand, limits our growth potential, but on the other hand, it allows us to be selective in the transactions that we pursue. And hopefully, if I believe I'm speaking for everyone, if our banks grow further, we'll be able to proportionally grow our exposure in shipping under this focus and framework which I have described.
That's interesting. Thank you. Nick, would you like to say a few words? Bank of Cyprus.
Just without repeating things that have been said, I don't have evidence to show that COVID has created new opportunities. Perhaps someone else has evidence that retreating banks have accelerated their exit, or the growth of some expanding portfolios has slowed down. I would say that this is an opportunity to test ourselves and test our relationship. So this is in terms of opportunity that you asked, this is the greatest opportunity. And by hearing all the co-speakers today, we're all focused on relationship lending. This is a key issue for ourselves here at the Bank of Cyprus. We're very client-centric culture. So once we choose who we want to do business with, the state of the market is not the key consideration. Personally, I prefer the counter-cyclical approach. So I would start a relationship in lower market conditions because everyone is more on guard, because values are lower, because many other people are not there to support. So you stand out. So, but a good bank should be there in good market and in bad, and this is the time to prove that.
That's very interesting. Can I ask a different question? Are you finding that new lenders are coming into your markets that you haven't seen before? That's an open question to any of you. Have new people arrived on the scene? No, not seen.
Well, you hear a lot of smaller names. You hear some funds that were not bothered with shipping to be involved in shipping or more in shipping lately. But frankly, I don't see them as threat, and neither as competition for us. We have a very selective strategy and target which differentiates from what these people do.
That's interesting. I mean, how would you in sort of further west in Europe, and certainly out in the Far East, you well know that the Chinese leasing companies have been very successful as providing almost the most dominant part of capital for shipping. Have you come across those as PRC leasing houses perhaps taking some of the work that you would ordinarily have done with your shipping customers, or would you argue that actually it's a completely different product and that these things aren't really they're not really competitive in that sense?
If I speak again, I have seen them, Jonathan, and in a couple of cases we lost actual business to Chinese lease structures, but this is not directly a direct competitor with what we do, and the owners that decided to do that had a different solution in mind, which complemented their banking relationships with a couple of lease transactions. So it wasn't necessarily even though we prompted and wanted to do these financings, which ultimately ended there, I still think, not because of only the terms, but the whole context of the offering and relationship is totally different.
Yeah. Would anybody else like to comment on that, or should we?
Yes, well, I would tend to agree with Nicholas. There is some overlap between traditional lending and Chinese leasing. We have seen clients who have opted or are considering opting for Chinese leasing for part of the fleet. I believe that overall, and again, returning to our smaller size and overall lending profile and strategy, I would tend to believe that Chinese leasing focuses on larger vessels, on younger vessels rather, and much larger tickets, offering high leverage, which I believe in most such transactions, not all, but in most of them, we wouldn't be able to compete, probably due to size, pricing considerations. So yes, there is an overlap, but I don't believe it will wipe out, so to speak, the market that we are targeting. We still have, because of our size, we can fill up our loan books to a satisfactory degree from the remaining available market, which is of course very large for us. There's room for all players, especially for small ones to fit in.
As I've understood, your market is very much Cypriot Greek shipping sector. Do any of you have any plans, or could you foresee that you may lend to ship owners who don't fall within that category? Could you go more international, or is that not really a foreseeable event? Christos, what's your take on that?
The Greek and Cypriot ship finance market is a 50 billion industry, and it's pretty much there's enough business there for AstroBank and actually for other banks participating in today's panel. And Greece is a market we feel close to. There's because of traditional ties, common language, culture. So for the moment, Greece and Cyprus remain our focus.
And Antonis, do you have any comments on that? Is it similar for you, or do you have different plans in the future?
If I can use just 1 minute extra to also give a comment about the alternative finance providers. I would agree also with the other guys that we don't feel really threatened by alternative capital providers or leasing houses, because I believe that they target different clientele. However, the problem would be for the market. In case the market is flooded with money, this will unavoidably create a problem with excessive order book and supply. So we have seen the story in the past with private equity funds and others which acted initially as equity participants, and then after, when they realized losses, converted their strategy to credit providers. All market participants, owners and lenders must show discipline, otherwise the problems will follow. And the problems that will follow will be, as usual, first for the equity holders, the ship owners, and then for the mortgagees. Going back now about where we focus, of course, we also focus, as Christos said, is a 50 billion market. So for us, it makes no sense to expand further since there are so many opportunities in Greece and Cyprus with more than 500 small and medium-sized companies to choose from and to do business. But one more point I want to add is that despite the fact that we have the lockdown and it makes very difficult for us to go and see live our valuable clients, we have adjusted our platform as a bank. We have adjusted using more, virtual type of information with internet. And I think that it is very important that our team maintains long-term relationships with established companies who know us and trust us as a bank and as units, as people as well. So we have built solid on solid foundations our relationships, and they were based on trust and honesty. Of course, we want to see our clients, but we can wait a couple of months before we go to see them.
Let's pick up on that. What are the other banks doing in this sort of half lockdown world? Constantinos, how are you keeping up with your clients? Are you able to meet people in Cyprus?
We are able to meet. Of course, you have to respect, first of all, the general rules of the game as imposed by the government. We have some internal policies which are quite conservative. We need to be careful. We obviously we should not take any risk in disrupting either our ordinary course of business or our clients' course of business. We do continue meeting clients where it's necessary. We have replaced meetings with video calls and virtual meetings on various operational matters, which are running very smoothly without problems. But I think our big advantage is because we are a member of Eurobank group. Relationships with Greek ship owners are managed globally by our parent bank. Correspondingly, the relationship in Cyprus are dealt directly by us here. So wherever our clients are, Eurobank has physical presence. We are able to meet with them where necessary. They feel this proximity and direct contact with all the advantages it entails. And it is very easy for us, because of these synergies that we have in place, to deal with any sort of documentation, signatures, or other operational matters. It is basically, we are present as a group wherever our clients are located.
Yeah. Christos, what are you doing? How are you surviving?
Well, yeah, business traveling and meetings, restricted today, and we have a policy within the bank not to travel or meet clients. So it is more challenging to discuss new business or with new clients, or potential issues on existing transactions. But business, of course, has not stopped. It has naturally slowed down a bit. So we have adapted as everyone else. We do video or conference call, with clients, and for new business we've done electronic closings on all the transactions we have closed so far in 2020. So it's a disruption, but not a game changer.
That's true. We've managed. Nick, are there any new ways that you've come across to maintain contact that will be interesting, that are slightly different perhaps from what the other folk have said? Is there anything new you can think of that you've done? Or
look, I think people found new ways which will last past the pandemic, new ways to communicate with each other, and I hear in the internet and on TV discussions about and question marks about the necessity of strict office space and people working in an office every day, and some of the work staff working from home. and the need for all these meetings. And I think internally ourselves, we're having Skype meetings. Now half of the unit, the shipping unit, works from home. We have a daily Skype meeting, and some of even the credit committees are happening through electronic means nowadays, which in some ways saves a lot of time for me traveling from Cyprus to Nicosia, for example. But it also works. It truly works. But there is another lasting effect, which I think it's more notable now. And the people in my unit have been relaying that to me. Even though people may not want to meet you, there is a gap of connection with your clients. And when there's a long period, when there is clients that you haven't seen for 9, 12 months, there is a little bit of gap. And in this, I think in this post-COVID era, we will equally realize that that personal contact is also equally as important for the things that we do, which is relationship banking. And I think that is emphasized here.
Yeah, you will not beat that. I mean, I would be loved to be in Cyprus with you today, as I'm sure Kevin would, and it's just so frustrating that it's the second cancellation that we managed to hold this. It's the people contact and looking at people in the eye and finding out how things really are, or the tidbits of conversation that you pick up. That is what we are missing, that I don't think the internet can actually replicate. So we do look forward to meeting each other when we can, hopefully sometime in the beginning of next year. So that is good. Shall we move now, just before we end, to look at some current issues in ship finance? So I guess we're all aware of some of these issues. The one that is troubling the lawyers at the moment is the Libor transition. In other words, we know that Libor will come to an end at the end of next year, and that, of course, all our shipping loans are nearly all US dollar loans, all have interest governed by, determined by Libor, and that will disappear. So every single one of your loans is going to need to be amended, every single one of them, the existing ones. So that's going to have a big impact, and that is it's coming very fast, and we're preparing for it and planning on documentation. I'd be interested to hear how you banks are dealing with this. First of all, I mean, Constantinos, I'm sure you have committees in Greece looking at this, but is it filtering down to you, and how do you see it from your perspective, the Libor transition?
Look, thank you, Jonathan. The Libor transition affects not only shipping loans, and not only in Greece, but also the bank's loans in Cyprus, also in other sectors, which are denominated, of course, in USD. Bank is, of course, aware of this forthcoming transition. There are committees in place also locally, with the participation also of our legal team, but the preparation is still at a rather premature stage. We have not received yet sufficient information as to the new replacement rates. So what we have done so far is with respect to new loan agreements that have been signed recently or in the process of being signed. As I'm sure you've also done in deals that you're involved in, we have included rate replacement clauses, which will permit the future substitution of Libor without need for addenda in the agreements. As regards the older agreements, which with no such clauses, we will wait to see what the solution will be once all parameters are known, so that we'll be able to tackle this matter in a comprehensive manner. So for now, we are organizing ourselves. We are being informed of developments, and we'll take action when every important aspect is known.
Yeah, it's very interesting. So just to share with you that some of the other, international banks, some are very well developed in their thinking and their requirements, and we've had instructions exactly what is to go into their loan agreements and when. Others are just waiting to see when the final documentation suggestions from the Loan Market Association is actually settled, and will probably just jump straight into replacement rate screen for risk-free rates once it's settled down. So there may be only one supplement in those loans. Just
exactly.
Bang, Nick, a few words.
This is not shipping specific issue, is bank-wide, and as Dino said, this is dealt in a bank-wide effort. We've reviewed all our loan agreements, and the shipping agreements have been done recently, and they have, under the LMA wording, they have substitute clauses so they will automatically substitute to the new the existing label to the new definition. We've written to all our clients. Our legal department is reviewing all loan agreements, including what we've reviewed, to be 100% sure. And I think otherwise, as Dino said, it's beyond our control, and we just observe to see what the final decisions will be and when they will kick in. As far as I know, it's the end 31st of December 2021, but this could change.
Right. Yes, with COVID, things the deadlines could be postponed. Well, that is interesting. Just one other current issue that is exercising some of the lenders at the moment is the Poseidon principles, and this is important for certain banks, less important for others. And I've spoken to some of you before this, and I understand it's all very important, and things will happen in due course. I think, Nick, you mentioned that you foresee this becoming more important, and I think that's exactly correct. It will become more important, and it is quite likely that the Poseidon principle clauses or something like that will come into your loan documentation in the future. I don't know whether you disagree with me, Nick, but I think that's the way of travel.
No, I feel this is going along the way of being standardized in some sort of language in LMA, on an LMA basis. But that doesn't mean it's a worthwhile initiative. And I applaud in many ways the people that have taken the initiative. We are in a developing stage, and it's very short period that we've started. We take some advice on the Poseidon principles, in particular, the costs, the fees, the investment in time and resources, the availability of information. So, but I want to make a point, because triggered by listening to the Deputy Minister this morning. And I share the feeling that in my 3 years here, I find that people in Cyprus are conscious, aware, sensitive about environmental issues, and the clean seas, for example, it is an immediate issue for them, and would have, pollution of the seas would affect them, not indirectly through the economy, but directly because people live next to the sea. They live by the sea, or they live from the sea. So it is really important. That filters through the institutions, organizations, the government. And, in the Bank of Cyprus, we have a strong environmental and social policy, which we need to abide with. And
each banks have that, as the lawyers do as well. But it is very, very important. I can see that we're approaching for time's up. What I'd like to do is ask each of you a final question, a little crystal ball gazing before we pass back to Kevin. He may have some questions from our audience. So can we just do a bit of crystal ball gazing now? Antonis, where are we going to be in 12 months' time?
First of all, hopefully we will be closer and without any social distancing rules. And I think that the times are very challenging, and for all people, this is the most important issue right now. They have to stay calm and overcome the COVID situation. So we have to keep to be patient. Following that, we believe that unless there is an ordering outbreak, an ordering spree by the ship owners, the demand will eventually also gradually rebound, and the shipping markets will be back in a reasonable normality. So as a positive note, I think that looking forward to the next marine mine in Cyprus, the situation will be even better.
Christos.
Well, our industry's outlook at the moment is very much correlated to the pandemic and its effect. Uncertainty is here with us today. However, shipping is an industry that has a long history of managing fluctuations and disruptions. But I'm optimistic. The dry bulk market has improved, the container market as well. The tanker market is challenging, but we had an extraordinary tanker market last spring. Overall, I remain positive for shipping.
That's good. Nicholas?
I echo some of the views seen, and I think 2021 will be a turbulent year before we get to that 12-month period that you're asking for. Until we get there will be some turbulence, and it's difficult to predict right now because there's a lot of unknowns for this pandemic. But I think that with an expected growth after the pandemic of demand, possibly an accelerated scrapping and lower ordering during the pandemic, we will find ourselves when we meet again, perhaps in 12 months, at the beginning of a 18-24 month period of a good market facing ahead of us.
Very positive.
Yeah.
Dino, what's your 12-month prediction?
Well, in recent periods, we've seen many crystal balls shattered in a spectacular manner. Obviously, as my colleague said, it's hard to make predictions. What we can do is to rely on certain fundamental principles, which will help us navigate through this period without problems. First of all, from our perspective as Eurobank Cyprus, we need to keep managing our existing relationships and ensuring to the largest possible degree that we will not have any problems or disruptions within our lending portfolio. As regards business development, we will continue to develop our loan book to the extent of our capacity and thresholds, either directly or through our parent group. Maintain relationships with high quality ship owners with that demonstrated strength, which are of very significant comfort for us, such as leverage, liquidity, and their overall track record. It will be interesting to see what effect the efforts for a coronavirus vaccine will have on the market, both in terms of market sentiment and on the actual market performance.
Yeah.
And also we have the forthcoming US elections. We know that certain global trade disputes that have been taking place in recent periods. The outcome of these elections may also affect to a degree the way that global trade is done. So we, in a nutshell, we stay focused on what we have been doing so far, which we believe is successful, and we're looking forward to take on new opportunities as they arise. There is comfort, as Nicholas also mentioned, because of the particularly low order book. So the fundamentals on the shipping market in all segments on this side is rather comforting. We do not expect an overheating due to an excess supply of tonnage in any segment taking place in the near future.
Excellent. Well, I think that there was wise words and predictions from all of you. Thank you so much. Thank you for joining the panel. I'm going to hand over to Kevin. Kevin, do you have any questions from our audience? How is that faring, or do you have any questions?
Yep, sure, Jonathan. Thank you very much. We have several questions, but we don't have very much time. So I'm just going to ask a couple of questions. The first one being, when you speak to new clients, I guess we're talking new clients here, are they trying to squeeze margins and increase leverage and relax covenants and to try and get the best sort of possible deal for themselves? or these days is there more of a general understanding about what both sides are able to accept or offer? Nicholas, perhaps?
Yeah, I would say that this is not the time for squeeze from any side. And from my experience in the sphere we operate, everything is done after a mutual and friendly understanding of what is within the sphere of achievable. Pressure on margins and leverage and covenants, that doesn't exist particularly in different markets. And the banks equally are understanding on what can be achieved. So, you know, the key consideration is not those parameters, but who you're dealing with. And the key consideration for the bank is selection of the client. And that is where I would need to be very picky.
Okay, thank you. Another question, perhaps I can address it to Adonios. There was some discussion earlier on about moving up market to sort of top table clients, or anyway, you know, sort of larger groups within our shipping kind of horizon. Does this mean better pricing and different deal structures for those clients, or do you pretty much stick to your guns and you have you know, targets in mind?
I mean, we know each time the counterparty that we're talking to, and we adjust the terms we offer to reflect the undertaking risk for the bank. But it's not only the margin that the client should look at, because it's a set of factors that the term sheet includes. So it's also the level of advance, the employment, you know, the asset, the point of the cycle in the market. So we do our analysis and we adjust according to all these factors. So the terms we offer to our clients.
Okay, thank you very much. And a final question, and I can perhaps ask Christos first and then Constantinos. This is a more generic question. I mean, are there particular sectors which you would prefer to finance in the next 12 months? And the three which are mentioned in the question are dry, tanker, or container. Christos?
Oh, I would focus on dry and tankers, to keep it short.
Okay, very good. Constantinos?
This is a case also for our portfolio. We would not deviate from the traditional workhorses, vessels that can be easily sold and have an active second-hand market. If this could include, in some cases, also containers, provided that deals are structured under the current market conditions and are under the same conservative terms as adopted throughout our portfolio, it is something that I believe our group can consider. It always depends on the quality of the counterparty. Absolutely. And the terms on which the transaction is structured. It's each case is, of course, and linking to the previous question, is examined by a group experts on its own merits and in a very consistent manner, and using the same models in terms of credit analysis, assessment, pricing, etc., as we do with every loan.
Okay, thank you very much. So unfortunately, we're out of time. So Jonathan, Adonios, Christos, Nicholas, Constantinos, thank you very much for being on the session today. We're back in 1 hour at 3 o'clock with our final session, which is market direction and sector predictions. And I hope you'll all be able to join us again then. Thank you very much. Bye.
Thank you.
Thank you very much.
Thank you.